According to Investopedia, a Fibonacci retracement is a popular tool among technical traders and is based on the key numbers identified by mathematician Leonardo Fibonacci in the 13th century. In technical analysis, a Fibonacci retracement is created by taking two extreme points, usually a major peak or trough, on a stock chart and dividing the vertical distance by the key Fibonacci ratios. Once these levels are identified, horizontal lines are drawn and used to identify possible support and resistance levels. So, let's take a look. Back in March of 2009, within days of the bear market low, Jesse Felder shared this chart that highlighted a very interesting long-term Fibonacci support level. That chart shown here shows that the S&P 500 bottomed almost exactly at the 61.8% Fibonacci retracement of the bull market gains that began in 1982. Obviously, this proved to be a very durable low as stocks went on to gain more than 300% over the following decade. Just over a year ago, Jesse shared another chart that highlighted yet another long-term Fibonacci level that could prove to be equally important. And this chart here is the updated version of that chart, and it shows the S&P 500 Spiders ETF struggling to overcome the 1.618 Fibonacci price extension of its gains from 2009 through 2015. Jesse also added the 1.618 Fibonacci time extension, which he says comes into play right about now. According to Jesse, just as the earlier Fibonacci level marked an important turning point for the broad equity market, this current one could do so as well. Time will tell. So how reliable is the Fibonacci retracement in predicting stock behavior? The main detraction, in my mind, is that the use of the Fibonacci retracement is very subjective, perhaps even more subjective than the stock market system I use. But as an example, just viewing this chart here, the market has already violated the market level on the upside, and we are beyond the stated time period on the right side. Further, different traders use this technical indicator in different ways. The traders who are profitable using the Fibonacci retracement vouch for its effectiveness, but those who lose money say it's unreliable. Well, that's not all that surprising. Some argue that technical analysis is a case of a self-fulfilling prophecy, which is what you've heard from me many, many times. If everyone is watching and using the same levels or technical indicators, the price action can often reflect that fact. The underlying principle of any Fibonacci tool is a numeric anomaly that is not grounded in any logical proof. Fibonacci retracement strategy can only point to possible corrections, reversals, and counter-trend bounces. This system struggles to confirm any other indicators and doesn't provide easily identifiable strong or weak signals. For this reason, the Fibonacci retracement requires other indicators or technical signals. Well, in my system, I rely on other oscillators, so that's fair game. Therefore, Fibonacci retracement strategies suffer from the same problems as other trading strategies like mine. But since it is in wide use, it's best for us to have a basic understanding of its process. With my stock market strategy, I don't necessarily set up specific stock market levels or even timing. With my strategy, I simply try to work out the general probability of a trend and if there is going to be a change in that trend. Such as this weekly chart here. To me, it's pretty clear we're in a downtrend. If you look to the oscillators, such as the MACD, the idea is to observe the previous experiences and establish the levels of when the market made tops or bottoms and when the market trend made a change. Although we can never be exact, except for maybe a pure coincidence, We can better prepare our portfolios with the anticipation of the change and help set up our strategy for when those changes come. In the end, it's not the system you use, it's simply how well you stick with your chosen strategy and not let emotion rule your decisions in a reactive manner. If you can succeed in holding your strategy, then you gain a huge edge over the market. So, good luck to you all. If you gained any value from this video, please subscribe and follow the rest of us on the stock market path. So for today, that's ChewDog Charts. Thank you.